Hey, it's Eric Osnes with Homebridge Financial Home Mortgage with my weekly update on mortgage rates and the economy for the week ending March 14th, 2022. Well, inflation is still running hot. So, why did mortgage rates drop this week? If you want to have a relaxing weekend this week, don't look at your 401k account today. The stock market is dangerously close to a bear market territory, but the good news is bonds finally had a positive week. Inflation is still really running hot. The producer price index, which is an index I really like to follow, it measures the prices at the wholesale level. These are the prices for raw materials and components that manufacturers have to pay. That PPI rose 0.4% in April. That's 11% year over year, a still big whopping number. This is a leading economic indicator. Higher prices, at the wholesale level, can be really handled one of three ways by businesses. They can increase efficiencies. Typically, that's by replacing workers with robots. They can reduce costs, which usually translates to layoffs. We're definitely seeing that in certain industries right now, including our financial industry. Or they can increase prices. Most companies will do some combination of those three, but increasing prices is probably the easiest. And yet another sign that inflation is most likely to stick around well through the summer. But there was other news this week that helped offset those inflation fears and helped us push the interest rates a little bit lower. The first one is Fed Chairman Jerome Powell, who was just reappointed to a second 4-year term. That was an eye roll. Indicated in testimony this week that a 0.75% hike in interest rates is not likely at the next one or two FOMC meetings. Most likely, they will continue to increase rates at their next couple meetings by 0.5%, not 0.75%. That was well received by the bond market. Number two, also Jerome Powell started hedging about whether the Fed could navigate a soft landing of the economy. A soft landing, meaning that rather than go into a full recession, we'll just gently see the economy slow down, which needs to happen to help control inflation. Less likely that that will happen. I've been saying that for weeks now, that we're almost definitely kind of leaning towards a recession. Number three, Europe already is most likely in recession. Things are rough over there, especially with Ukraine and oil prices. And number four, the Cass Freight Index is a statistic I also like to follow. It covers the cost of shipping globally. That index dropped 2.6% in April. That's a very strong signal that the worldwide economy is starting to weaken. Again, another indicator that we might be heading towards a recession. So this week, those recession concerns really outweighed the inflation concerns, and we saw rates drop for the first time in weeks. Here's the national averages. A conventional 30-year fixed rate mortgage, 5.35%. That's down 0.27% from last week. 15-year fixed rates, 4.75, down 0.15 from last week. 30-year fixed rate FHA and VA, 5%, down 0.19% from last week. 30-year fixed rate jumbo loans, 4.64%, down 0.11 from last week. Kind of other good news, we've got more inventory coming. There's finally more homes on the market, in our local market especially, which is great news for buyers. I even had 2 offers this week accepted at the list price, not tens of thousands of dollars higher than the list price. Don't get me wrong, it's still a seller's market, but the outlook is improving for buyers, especially if these inventory levels continue to rise. More listings equals more choices for buyers. And even if there's multiple offers on a home, the price may not be bid quite as high, because buyers have other choices in that neighborhood or in that price range, and they're going to walk before they, allow the price to get to a ridiculous level. If you backed away from your home search over the last fall or winter, maybe just got frustrated with this craziness that we've been dealing with, it may be a good time to re-engage and try again. Make sure that your loan is fully underwritten. That still makes a huge difference when you're making an offer on a home. Have your loan approval ready and check those rates and payments frequently to make sure that what you're bidding on is something that you can afford. I'm always able to run those numbers for you. Happy to help with all of that. So just reach out. You can call me at 206-915-3742. You can email me, Eric at ericismybanker.com. Check out my weekly YouTube on update on interest rates. Just search for Eric is my banker on YouTube. I'm also on all social media, Instagram, Facebook, all of that. Hope that information is super helpful for you. Hope you have a great weekend. Don't look at that 401k. I'll talk to you next week.